Shifting our focus now to currency markets, take a look at euro dollar this morning. It is lower. 138.66 is where we're sitting, off about 0.1%. But we did see the euro climbing overnight, in fact getting right up to about 139.37 according to the electronic trading platform EBS. All this on the back of these moves by central banks to try and ease some funding pressures for European banks. Dollar yen 76.71. Let's bring in Ron William, who is technical strategist at MIG Bank, joining us out of Hong Kong today. We have Paul Donovan, MD and Deputy Head of Global Economics at UBS, as our guest host, staying around the set here at the SGX with us today. Let's bring up the euro first. Ron, are you sailing into this rally because we still have persisting fears about Greece, or do you take some of the gains at the moment?
Well, very much so. I mean, selling into the rallies would be a good strategy. At the moment, we believe this to be a short covering rally from oversold conditions, but also on the back of the recent event-driven news. But big picture, this is a euro-dollar kind of falling from grace, if you will, after it broke below a key trading range, which caught out a lot of traders and investors over the last few weeks and months. The move is down 7% since late August, and personally seeing this kind of move go into 134 and 128.60 over the next few weeks ahead. This is one point here on a sentiment indication, is that this is just showing you the ongoing reflection of the market's focus on the EU debt crisis vis-a-vis problems in the US.
Paul, when you look at this from an economics point of view, do you think we're getting to the point where euro has any form of stability?
Well, I mean, I think it's got some stability. It's worthwhile bearing in mind. I mean, the euro's been a weak currency for a couple of years now. It's been weak against the yen. It's been weak against the Swiss franc. It's only against the dollar that it's held up, and that's because the dollar's a weak currency as well. I think what's happened, what's changed over the last few weeks is we're no longer looking at the crisis in Europe as being a peripheral crisis. This isn't Greece, it's not Spain. This is a euro crisis, not a peripheral crisis. And that shift, I think, does bias us to a weaker euro. I'd be a lot happier seeing it around the 130 level at the end of this year.
Let me do a bit of self-interest here for myself, but also, Paul, because you are going to Australia this weekend. The Aussie dollar this week, Ron, it's been beaten down. It's had a bit of a success climbing back above the 103 mark. Some people are saying this is ridiculous to see it drop so far because it suggests we are going to see interest rate cuts or slow growth like we are seeing in some of the other economies. What do you make of the Australian dollar? Do you see it bouncing anytime soon?
Well, I mean, I'm looking at the Aussie dollar very much on a long-term basis ever since we had a major reversal from the record highs. And I still believe that we get continued weakness in Australian dollars versus the dollar, but also various other commodity-rich countries on the markets. So I see Aussie dollar going further lower over the next few weeks.
Ron, hi, it's Lisa here with Karen. Many investors, and Japan in particular, would be happy to see the bounce in the euro versus the Japanese yen. What are you seeing on the charts when it comes to euro yen? What's your outlook there?
Well, I think at the moment euro continues to be weak. Yen is an open question mark at the moment. But perhaps over the next few weeks we may actually see yen weakness across the board. I mean, that's the long-held view technically going ahead.